Good afternoon, everyone. It's live stream Tuesday. Got my coffee here. And yeah, what a interesting few days it's been. I mean, what an interesting year it's been so far. But welcome, everyone, to live stream Tuesday, regular time. Did a marathon session last week. I'm going to actually try to not cough this week. That way people don't worry about me having a cold. You can tell I'm much better. And I got coffee to keep me up. But welcome, everyone, to Livestream Tuesday. Get your questions together. Happy to take them on pretty much any stock, any topic, any subject. Want to just make some general market comments about what is happening, which is that this market is definitely very different than 2024. I mean, you can kind of see it by the price action of the indices. You can see it by what people are willing to bid up. You can see it by what people are willing to pay for certain types of stocks, which I don't think is going to be an anomaly. I think it's going to become the norm for a while. And I talked about this in my silver tier update, which I just finished and gave to the team before coming on. So if you're a subscriber to ATG Digital, definitely listen in to the update that will be sent out by the end of today. I got the update to the team late, so it'll come out a little bit later than usual. But look out for that, because I talk about a shift in market preferences, which is very different than what we've had before. It talks about, I think we're going to have a very narrow set of stocks that are going to generate a lot of the gains. And it's going to require some adjustment. And I was talking about a sale that I recently made, and wow, people willing to now pay that much more for this. Certainly in another market, I don't think people would be bidding that stock. I'm not trying to be cryptic, but I'll cover some of this. But let me do all the legal disclaimers and disclosures before I get into everything that's going on, from Trump's trade tariffs, AI, what else? Crypto, what's happening. We had a little mini crypto crash over this weekend, supposedly because of tariffs, which makes no sense, but I can provide you my explanation. All right, but here is the legal disclaimers and disclosures, which is that this live stream and the content from ATG Digital is not investment or financial advice. It is presented to you as opinion, information. Oh, that's a weird pronunciation. Information, engagement, and entertainment. I think the most trolly comments that I get from people are when I say something they disagree with. And then I get people like, you are definitely entertainment, which I suppose is good. It would get more people to watch the live stream. And that would be a good thing for me. Next, all ATG Digital content may contain errors, oversights, and mistakes. Understand that investment operations have significant risks and can lead to the loss of your principal. The sort of plain English way of saying that is like, you're not guaranteed to make money just because I happen to talk about something. Second, you can lose money. So whatever you choose to do with what I say, whether it be on the live stream or anything on ATG Digital content, it's your responsibility in terms of gains, losses. You can take the credit for it. Next, I, the owners, employees, contractors of ATG Digital, own, trade, transact, and securities are mentioned in this video and all content from ATG Digital. We do not take money from companies or crypto people, sponsors, etc., managements to recommend their stocks or crypto tokens. This is something that many influencers, content creators, whatever you want to call them, they do take money. and you're required to disclose it. We don't, but we're disclosing that we don't take it. We provide quite a bit of free research. Our Substack comes out daily, which has been quite rewarding, I think, especially for the last 6 months. The Ballman Speculating podcast is become like increasingly about really investor behavior and macro content. So if you're interested in that, check that out. And obviously, I'm on YouTube. Social media, very active on X, especially when prices are moving around. Like, so when the crypto crash was happening on Sunday, I was, yeah, writing out a lot of stuff. So if you want real time coverage of anything, that's really where I'm most active in real time on X. Facebook, I do a monthly live stream, and we put up things there reasonably often. And Instagram is a little bit more hit or miss. Subscriptions. This is my business. This is our business. atgdigital.media. That is the actual website. atgdigital.media. Subscriptions for the silver tier begin at $9.99. And then from there, the next tier up is for gold tier at $14.99. I think the next one is $19.99. These are pretty reasonably priced. What do you get for it? Well, you get access to the entire portfolio. You get access to updates. You get access to new trades. For example, we sent out trades today on Platinum, 2 AI crypto tokens. We sent out a trade today in silver tier for a stock, and also did an update for silver tier. So regular content, which covers picks, updates on the picks, general market commentary, and then usually in the written updates, like I do video updates, written updates, we also answer any questions that we get from people. So that's what you get from an ATG Digital Media subscription. Check that out. Okay, I'm going to clear my throat and then talk. All right, so if you were paying attention on Sunday, starting about Sunday, I think the trade tariff news from President Trump started to come out, I think Saturday, that on Mexico and Canada, and a kind of panic ensued in the only market that was open, which is crypto markets. And Bitcoin, which had traded for as much as 106,000, just started to like descend, kept descending, and made it all the way to 91,000 something. And what does Bitcoin have to do with trades and tariffs? Nothing, really, as far as I can tell. But the thing is like, if you're managing money, right, and you're like, oh my God, there's going to be a market panic, I want to raise money, you will go to the market that is open and you will sell over there, raise funds, maybe go short something. And that's how markets operate. And they don't always like make logical sense. Into any panic, into any big worry, people want liquidity and they're going to want cash. And whatever opportunity, however great the prospect is of any investment, yeah, that's all thrown out and people will just lurch for cash. That has been true my entire career, and that was obviously true on Sunday. But the markets opened up, and truthfully, I mean, there was really nothing. I mean, I think the S&P 500 was down maybe 1.5%. In other words, there was really like no real panic there. Nobody had anything that they wanted to sell. So if you sold your Bitcoin, you sold Ethereum, you sold your crypto because you're like, there's going to be a crash on Monday. Well, no, everything actually just levitated right back up. And essentially has held its value. So let's talk a little bit about tariffs, what it really means. Should you panic about it? From my perspective, whether it be in stocks, whether it be in crypto, as we've seen, I don't think the market really cares that much. I think some folks in the media care a lot about this, but this is not our first rodeo with Trump tariffs, right? We saw this in 2016, I think it was in 2018, where a number of things these were levied against China. So we've seen this before, and the truth is that a lot of those tariffs were kept in place by the Biden administration. Even more, if you go and look, pretty much every country, not pretty much, every country has tariffs. Every country. They all protect certain products. They all protect certain industries. They all protect certain, commodities. This is not such an unusual thing. This is actually completely normal. What is abnormal is that the US for, I'd say, until Trump 1.0, 2016 to 2018, acted in a way that was as if like, hey, look, we want a beautiful, wonderful, incredible globalized world. And if we single-handedly and unilaterally reduce tariffs for other people, allow people to export here without require them to do the same thing, the world will just get better by itself, and everything will be better. And that has not worked out. Pretty much most countries kept most of their tariffs while doing the absolute minimum to open up their markets to our products and services. And over 30, 40 years, what it's done is that increasingly, pretty much, whether it be Europe, whether it be China, whether it be Mexico, they all make things to essentially this export here. They don't really make things for their own markets and for their own customers, for their own consumers. And that's not the original premise of free trade. Free trade was like, well, we make this stuff here and you guys also like that. That's great. You buy it from us. Oh, you make this thing here and we like that. Oh, and we'll buy it from you. It wasn't like, oh, you guys buy this and we'll try and using, of course, much cheaper labor, many laws or restrictions that, essentially make it cheaper, subsidies maybe from the government. We'll make it much cheaper and we'll ship it to you. That's not the premise of free trade. And so my point in bringing all this up is that I wouldn't be in a panic about tariffs. Tariffs are pretty normal. They are there in every country. What is different is that the US is now willing to act and behave pretty much like everybody else, looking to protect certain industries, products, services, our labor market, etc. And that does create definitely a winner and loser proposition. If you are a company that has benefited from the old globalization regime as practiced by the United States, where, hey, yeah, go produce wherever you want, and you can bring it into here with no, yeah, you don't have to pay a tariff, you don't have to pay a duty, you don't have to pay a tax. Yeah, that world is not gone away, but it is going away. I mean, very famously, of course, Apple chose to produce its iPhone in China, right? I mean, and this was not controversial in any way, shape, or form, right? I mean, everybody bought into the argument that Apple could not produce that over here at a cheap enough price. So, hey, it's perfectly okay for them to build it in China. Now, the knock-on effects of that have been enormous for us, which is that there was an enormous level of expertise that was developed in China to put together high-end electronics, to create a supply chain so that these products could be made over there. Oftentimes, these were designed in the United States, but they were made in China. So it was very easy for China to reverse manufacture and come up with the intellectual property. So we have missed out on like 10 plus years of manufacturing expertise on making these things. We do not have the supply chains for these things. And you can apply this for a number of other industries. Drones, for example. Any one of you who have drones, you probably have a Chinese drone made by a company called DJI. They dominate the world of drones. How are they able to go from scratch, to being able to build drones which have miniaturized electronics? Well, part of the reason is that, like the iPhone and pretty much all electronics were built in China for the better part of a decade. So, I mean, they were able to extrapolate that expertise, that lead, into numerous other industries. And while, it's maybe unpopular among some people to say that, these tariffs are bad, etc. I mean, if it continued over time, I don't know what the U.S. What would we make? What would people trade for with the United States? We wouldn't make anything. I mean, the old globalization, essentially, where people make stuff for us, we buy it, we send our dollars over there, and they bought treasury bills with it, right? They bought U.S. treasuries with it. In some cases, they may have bought a few stocks and things like that, but essentially, that's what they did. But at some point in time, if we make nothing, why would, I mean, the value of our economy would go down, the value of our dollar would go down. They wouldn't just keep accumulating this. So this globalization game of everyone making stuff for us, them buying treasury bills, it was going to end at some point in time. And it probably should have ended, maybe, truthfully, maybe 15, 20 years ago, when I think I put this up last week. Let's see if we can get back up again. Yeah, let me get this back up again, which really shows the various deficits of various kinds. And I know I'm going super macro on this, and I'll start to get into some of the other things. But since there was a panic about this, it's worth just looking like how extreme things are. Here, essentially that is our deficit versus other countries in terms of trade. That's our trade balance. Yeah, I mean, look at this from 1992 to 2024. As a percent of GDP, yeah, it's not at the all-time low, but this is, if this kept continuing and it became 6, 7, 8, 10, 20%, and we would just absolutely gut our economy, where we would, I mean, gutting, if all that other countries are buying from here, and remember, they're buying treasury bills. Meanwhile, we are buying things made somewhere else. In the process, obviously, we're getting cheaper stuff, but we're also making larger and larger parts of our population unemployed and unemployable, because once a skill set is lost, it takes a while to reskill and rebuild. So people can be against tariffs and say, hey, it's this, that, and the other. The thing is, like, there was no way that that's sustainable for another 15 or 20 years. And there's also no way that you can start to correct that without causing some pain. I don't think the pain is going to be spread to everybody. Why? Because, well, not everybody benefited from the old globalized regime. I put up a post saying this, which is that many small companies that produce and manufacture in the United States are going to benefit from tariffs. small cap companies, which are now a minuscule percentage of the market after 3 years of big cap, big tech outperformance, are set to outperform in 2025. And this person wrote me, and this was on Sunday night. They're like, hey, the small cap futures are going down compared to other indices. I mean, this is like a very, I mean, we're talking about a movement that is going to last decades. And this person, is looking at the futures overnight. I mean, it took 40, 50 years for us to get to where we are, which is this. Right? It took us from this just begins in 1992, where trade is approximately balanced. Then we, signed various free trade agreements in the 1990s. And then you can see increasingly people just start to ship stuff here, buy treasury bills, and the deficit. So it's not going to happen overnight, and the advantages are not going to show up in the indices in like one trade, but it is going to happen. And what we will find, I think, is that over this next bull market is going to stagnate the S&P 500, and is going to benefit smaller companies, which, I mean, we focus on at ATG Digital, but most people are in the S&P 500 looking backwards. And I also put this post up. Let me go through. In which I said, the music has stopped for many popular trades in the stock market. Most of these stocks trade at near all-time highs. This is the nature of markets. People tend to buy near peaks because the most recent returns are good. And of course, in 2023 and 2024, the S&P 500 was up, 20, 30%. And when you go on social media, you can see a lot of people talking about just buying into the S&P 500 and expecting like 12, 15% a year as if it's going to be automatic, like some sort of like a savings account. And I'm going to say these people are going to be disappointed, because as someone who was around for the 2008 crash and saw the environment there, I mean, the 16-year bull market or 15-year bull market from 2009, let's say, to 2024 was built on low prices, very low interest rates, low valuations, low expectations. I can tell you, nobody back then was expecting good things for the future. Why? Well, because their crash had just happened and people just extrapolate forward. Just like now, we've gone through 15 years where approximately markets have delivered 12%, and everybody's like, yeah, for the foreseeable future, 12% ain't going to happen, folks. Obviously, I'm saying that now, and it has to be measured into the future. You can't measure it by overnight futures trades or by 1 year. But just like in 2009, if you bought the S&P 500 or you told people to buy the S&P 500, they told you were an idiot. They told you were a fool, and they would have strung you up. And I know this because I had to do investor relations for our hedge fund back in 2009. Nobody wanted to buy. Nobody. I remember doing speaking at a hedge fund conference, and I was bullish, right? They literally wanted to throw their shoes at me. And I was like, listen, folks, prices are cheap. We are still a large, significant economy. You can see unprecedented things being done by the central bank, etc., to liquidity. At these prices, you would make the bet that things might get better. Oh my God, the hate I got in response. People called me a fool. People called me dumb. It was tough. So looking forward, when you look forward, you see this. What? A blank sheet of paper. Hey, the future is filled with uncertainty, the unknown, risk. So, of course, what do? Well, we look back and be like, well, the last 15 years were great. So the next 15 years will be great. Yeah, I'm saying that I think you want to be in something different than the S&P 500, which is today dominated by essentially what, 10 companies? Let me put this one up. 15 companies, maybe. Let's just put this one up. All right, let's put this up. So this is shows you what percent of the S&P is in how many companies. So let's just do the top 5. The top 5 companies in the S&P 500 are 26% of the index. Top 5. 5 companies, 26%. I'll make this a little bit bigger so you guys can see. Top 10 companies are 35.8. Just remember, top 5 are 25. So 5 and 10, we get to 35.8. Let's just do top 50 let's do top 20 companies. The top 20 companies are 46%. Let's do top 25. Remember, this is an index of 500 companies. The top 25 companies have 50% of the value of the S&P 500. So the remaining 475 companies are 50%. But really, like, let's just get to the top 100 companies. Top 100 companies represent 73%. So 400 companies in the S&P 500 are 27% of the index. That's what you're buying if you buy the S&P 500. And I will say you really want to be invested in the 27%. You need to go and find the smaller companies that actually benefit from tariffs, that benefit from reshoring, that benefit from the introduction of innovation, that benefit from growth. And that's where you're going to see outperformance. Doing the same old thing as what generated the big gains in 2023, 2024. And those companies are bought up, they're over-owned, they're very highly valued, their prices are not cheap. And on average, into a period when there's going to be more sellers than buyers, those stocks will get sold, and people will stay in the stocks where they don't own enough. They're like, well, yeah, I don't really want to sell that because the growth there is better than here. It's got a better valuation. I can also see its prospects are better. So we're at this moment of shift in terms of markets where one bull market, based on all the things that I mentioned in my X post, low valuations, low interest rates, low prices, low expectations, that's all kind of done. Like, I mean, you could have bought, Amazon, Apple, Google, heck, anything in 2009 for very low prices, but nobody wanted to buy then. Why? Well, they just sold. And in the process of selling had, created a crash, and the sentiment was terrible. Nobody wanted to consider, what was ahead. Just like today, we are giddy with the returns of the last 15 years. And we're like, the next 15 years will be the same. Next year will be the same. It will all just be great. I'm here to say no. I'm here to say you need to be doing something different. You need to go, if the level of concentration, is what I'm showing you, which is like I said, the top 10 companies in the S&P 500 are 36%. We can, and you can know what they are. Right? I mean, it's not some big secret. Everyone knows what they are. I mean, Apple is 7%, Microsoft is 6%, Nvidia is 6%. I mean, And then from there, you can see it just trails off. By the time you get down to these smaller companies, there's nothing. There's 0.07%. Now let's look up some of our companies. Let's see. What's the biggest company? Tesla. Okay, Tesla's a reasonably big company, but minus that. Okay, Palantir, which is up huge today, is 0.34% of the S&P 500. 0.34%. Yeah, it is number what? Where is this Palantir? Number 52, 0.34%. 0.34%. Yeah, that's nothing compared to 6.75%. So the S&P 500 is very weighted in all these very large companies, which unless they can, I don't know, double, triple from there, which from 2 or 3 trillion, high prices, high valuations. Yeah, I mean, you're going to need to buy into some smaller companies that have growth in front of them. And that growth can only come from, again, some change in the macro environment, tariffs, in other words, reshoring, innovation can do it. I'm just scrolling through here for you to just see, like how little. Let's look at like the bottom. We're at like, let's say at the 250 mark. How much is in, which is United Airlines has 0.07% of the index in it. You think that's any change in United Airlines is going to affect the S&P 500? No. So then you get down to like, our stocks, which are much smaller than even these. Yeah, I mean, our stocks go up 5x, 10x, 20x, and they'll get to what? Barely, if a stock is 0.04%, we own Biogen, it's 0.04%. Yeah, for it to get to 1%, it would have to go up 25 times. 25 times. So the upside is huge. We own Zebra Technologies, right? And in gold tier, go up 25 times to get to 1%. Why am I doing this exercise? The upside from shifting your portfolio from what is big, what is highly valued, what is high priced, to small is enormous. And what you will see over time is that more and more investors there's no return here. Professional investors are judged based on annual returns every year. Where can I make my money? It's going to be in something smaller than these big companies, and that will facilitate a shift into smaller stocks, into innovation stocks, into growth stocks, into opportunity stocks. That benefit from changes like tariffs and the global trading system and other shifts that are coming. So that's one of the things that I want to address. The second thing I want to address is something I wrote about in my Substack, which I really recommend people subscribe to, because we actually talk about, in detail, stocks, and we've had a pretty good track record, especially the last six to 12 months, and certainly through the bear market. If you were listening to us, you'd have bought a lot of stocks very cheap that have benefited. Not everything has gone up, not everything has been successful, but you'd have enough winners that you'll feel like, I want to be in. So one of the things that I wrote about this week, and I write the Monday Substack, the rest of the team does the remaining of the week. I talked about that AI is a dominant presence in people's mind. People really want to participate in AI. Now, in the Substack, I think that's because many people truthfully missed out on the big tech bull market, or generally the bull market from 2008. And they want in on AI for that, or also many people just genuinely believe, and I agree with them, that AI is going to be a big deal. Those of you who were with me when I was with my old publisher, now I'm in business for myself, and the old publisher was called Banyan Hill. You'll remember I did my 2017 presentation at their conference, which was called the Total Wealth Symposium, and I did it on AI. And I actually have my presentation from there, and I just went back and I was like, natural language processing, which is, chat GPT, et cetera, was one of the things that I actually talked about. Now, back then chat GPT wasn't anything, but today it's obviously a big deal. I bring this up because I have some history with AI. I saw that AI was building on what had come before. It wasn't quite ready in 2017, but obviously by 2022, 2023, it was. And I actually tell a story that actually the publisher of Banyan Hill thought that AI was a dumb idea. He was like, "Man, I've seen all these people talk about AI with nothing. This is like a terrible idea. You should really do your presentation on something else." It was not. AI obviously now is the hottest sector in the market, and NVIDIA is the focus of most people. And I say that I don't think like, and I think the reason why people are all in on something like NVIDIA is that they're using the model of the internet, which is that in the 1990s, when the internet first started to become a big thing, people, dispersed that market capitalization among many internet companies. But the significant amount of it was like really in what's called picks and shovels companies like Cisco and others. But like the various internet companies that that were like we'd call them like social media content companies, people thought that would be distributed out among 20 or 30 companies. That instead didn't work out. Instead, we had like a whole new wave of companies come through after the bubble burst. Google, Meta, used to be called Facebook, and all the social media companies that came after. And now you got like this, the internet was like just locked into these handful of companies. And maybe that's what's going to happen. But I would actually make my bet that the model for the internet is not going to be the model for the AI development. And we got a good sort of sampling of why. And I'm aware of the conspiracy theories about DeepSeek, about China, et cetera. And really, if DeepSeek didn't come, we would have probably had a US competitor ultimately show the same thing, which is that a AI agent is actually easy to make, quite cheap to source, and doesn't need an enormous amount of money, which is the assumption that people have made about AI, which says you don't need, billions of dollars. You need the best chips, the fastest chips. We need quantum computing. Well, DeepSeek has shown that you don't need all of that. Their code is open source. Anyone can download it and they can customize it and they can create their own AI app using, they're not like the slowest chips. Well, you don't need like the fastest chips. So extrapolating from that, AI agents like ChatGPT, they're going to become a commodity. We're going to have them specialized by industry, business niches of all kinds, rather than being concentrated in one company or two companies. And that's because your DeepSeek, it could be from China, but it could have come from anywhere. It could have come from a US competitor. It could have come from Europe. It could have come from Australia. It could come from anywhere. But they proved this out using cheaper chips, a 30-person team spending whatever, 5 million, 10 million. So that means that AI is not going to go in the same model as the internet. Instead, we'll have a lot of specialized companies that focus on particular applications of AI or specialized by industries. The data will be important. In other words, loss of niches. And in that, I talked about UiPath, which is a stock that's just been smashed. But their AI, if they can use much lower costs, it'll be accessible to a lot of investors. I mean, a lot of companies. we're seeing, I think, the first signs. It's clearly not here because I think people are still wedded to the old idea, which is that the AI trade is going to go through NVIDIA. It's going to go through, these chip makers. It's going to go through OpenAI, which is the company that owns ChatGPT. But I think that's just the first wave. The next wave is going to be different and is going to go into companies like UiPath, like others that are going to show themselves out. And the key here is going to be like, hey, you can use cheap chips. You need like a data set that is really good that you can train on, that is specialized to a particular industry or a particular function. And that's where the next wave of AI investments are going to be. In my opinion, in my judgment, again, I'm not infallible. Sometimes I provide unpopular points of view that don't confirm what you want. You control me, but if you're looking for somebody to confirm you and I'm giving you something else, it's okay. You can have your view. You bet that way. I can have my view. Some things you'll be right. Some things I'll be right. It's all okay. Last comment before I go into comments and questions. Let's just look at where Bitcoin prices are. Probably around 99. Yeah, okay. And let me put up this chart. So, yeah. So you can see that Bitcoin has essentially, since getting into the 90s, has sat in this range. Where's this chart here? Sat in this range for what? Most of, essentially it began around really the 7th month mark from the halving, which would have been October 19th. And so we've been there. Sorry, not October, November. So December, January, February, and now we're sort of like arriving at the 4th month of sort of like just digesting $90,000 to $100,000. It's just been in that range, up and down, up and down. Still doesn't change what the this doesn't change the long-term picture, which is that these are the halvings and the post-halving rallies that have happened. This is from 2016. That's when 20,000 was the top, which was right about here in December. This is the 2020 when the top was, that came in this month, which was about 70,000. And here we are in 2024. We have just barely begun. So there are a lot of people calling for the top of Bitcoin at 125. Some say it's already happened. My view still is that we have something like 10 months of upside, and my target is still $1 million as the top, and which will be followed by a crash as usual back to something in the range of $200,000 to $300,000. And the reason why I believe I'm drawing these lines and acting like this is a repeatable pattern is because of the mathematical nature of Bitcoin, which is that finite supply, new supply halved every 4 years approximately. And I think with the crash that we saw this weekend, well, let me just put that up. I mean, yeah, so we went from 100. I mean, that really doesn't even do justice. Let me just put this up this is a 1 minute chart. This was what, on the 31st. Okay, so over 4 days, we went from 106, or you just go back even 5 days down to 91. So very rapid decline. A clear out of this size, and this was a pretty large clear out. The numbers that I was able to find on I think it's the service that I can find online is that nearly $2 billion was liquidated out. Potentially, it was even bigger than that. So usually, after a very large crash, it kind of like resets the table. A lot of leverage speculators are wiped out. The expectations are lower. People are reluctant to go all in, especially with big leverage. When you have people with big leverage who are in at even what I'll call localized tops, those are weak hands because they've got stop prices that are 5-7% lower. And so you get this churning effect in markets. Seeing them wiped out is great because they are less, number one, they've obviously lost capital, so they don't have the money to bet. They're also more reluctant to bet because they've been burned. So that means that as prices make new highs, that supply pressure, that selling pressure that's there for small gains disappears. And now as buyers come in and bid higher, you get a nice big run. My expectations for Bitcoin are that we are, I'll say, between $180,000 to $200,000 before the next halving anniversary. No, not, yeah, sorry. Between the next two halving anniversaries, which is between February 19th and March 19th, we will be at $200,000 and we'll be swinging in 30% to 50% fashion there. All right. That's what and one more observation, which is that I mean, if you look at some of the moves in, like, I'm going to put up the Ethereum crash, which is wild. I mean, look at that. Yeah, 3,400 to 2,100. I mean, what is that? 3438. Let me just do a quick calc here. 2,135 divided by 3,438. That is a 38% drop. Yeah, that's market clearing. In other words, most of the people who are short-term speculators, even some medium-term speculators, they're like, I'm out, I'm gone, deck clearing. And what it sets itself up for is where, again, far fewer short-term speculators, far less leverage, much lower expectations, which means that people buy slowly over time rather than going in all at once. Going in all at once in a big way all at once is usually topping signal and creates, again, people with a lot of stop losses. As I say in this post, a long line of buyers buying small incremental amounts is what creates a price rise, because there's buyers at every price willing to buy, hold, and maybe increase their position. So skepticism instead of huge enthusiasm. Huge enthusiasm means that people buy all at once. I'm going to buy with leverage. Why? I want to make all my money all at once. But if you have skepticism, you don't do that. And it distributes the buying so that people are persistently creating consistent buying pressure. And that's what I expect in Ethereum and the major altcoins that also experienced similar liquidation pressure in this last crash. And same is also actually true also for Bitcoin as well, because Bitcoin is, of course, I mean, it's still at, at or near $100,000. So nobody can say, like, its crash was more modest, but still, it is still the apex coin that like dictates crypto investor behavior. Okay, well, a lot of comments here. I don't read all of it because it looks like some of them are from everybody there. Okay. Flu has been going around here too. Yeah, my son actually has a really bad version of the flu and he's been out of school for a week, and has had a fever, has had some really bad cough, etc. So yeah, but mine was never like that. Truthfully, it was mostly just really I had congestion in my chest, and in my throat. But thankfully, that seems to be gone. 11 bagger on PLTR and taking some profits off the table. Woot woot. Yeah, we sold PLTR, and of course today I'm kicking myself and feel a little dumb. If you watch some of the old live streams, people ask like, should I buy PLTR? I talked about this in my live stream. I'm sorry, in my update for silver tier for ATG digital subscribers. I think that one of the big shifts in this bull market is like where people are willing to pay and bid up companies because they think there's only one of a kind. Palantir is kind of like a one of a kind. There's no second. And so, I mean, I said at 70 times earnings, it looks expensive. Well, people are willing to pay 75, 80 times earnings today. It's not earnings, sorry, sales, 80 times sales today. It tells me that we're in a different market environment. We have lots of new investors who have their own ways of determining valuation. And until they are wrong, they will continue to do what has given them success. And I think that this is a similar to the Nifty 50 era, which I think it was in the 1950s and early 1960s. I can't remember the dates specifically, where there was like 50 companies that people had to own, and pretty much that's what everybody bought. And they were growth companies of their time. And for the valuation parameters of their time, they just traded at very high valuations, and it went on for like a decade. So I think this is the beginning of like a new Nifty 50 era. I think Palantir is clearly one of them. And yeah, I mean, we'll probably look to buy back in at some point in time. I mean, we're happy we made some money, but obviously today up 20%. Yeah, I mean, I'm licking my wounds a little bit and wishing we didn't sell, but I don't think I'm a buyer into a straight line spike. We'll probably sit it out for a little while, and maybe it's even at a higher price, but we'll come back in because Palantir is growing at 30%. And if people are going to go and pay 70 times sales, 80 times sales, yeah, I mean, I want in. I want to make that money. I mean, it probably seems dumb, seems dangerous. You can always choose to opt out, position size smaller. But I think it's a marker of where this market is going, how investors are seeing this market. It's a behavior shift. And I'm paying attention to it and being like, I mean, essentially these companies that are seen as unicorns, meaning that they're so unique, they're so different, you got to just own them. And you gotta be like, yeah, you're willing to pay 70 times, maybe it goes to 77. And there will be some point, I'm sure, but it's probably years out, where you don't want to own them and they're overdone, etc. But obviously they can grow into, if they're growing at 30 or 40%, they can grow into some of these valuations, but they will never be cheap on a more traditional basis from the previous bull market. B, who I believe a valuable team member, is on. Thank you, B, for being on. She's manning, womaning the comments. So if you have questions about subscriptions, anything else, throw it in there, and B will answer and also acknowledge you. Thank you. I wasn't actually sick. I know I keep saying that. Yeah, I mean, I understand. I mean, between social media, mainstream media, our proclivity to generally focus on bad news rather than good news, it's not unusual. I think, for people to freak out. I would only say this, which is that is a different bull market. I would not be bullish if I owned the S&P 500. I laid out my reasoning why. It's very top heavy. The stocks that are most inclined to go up the most have almost no weight in it. So you're going to have to own individual stocks. You could potentially own, like, the Russell 2000 or 3000, but the same thing is true there. The biggest companies dominate that, and many of the smaller companies have the best prospects. So, yeah. Ed says he bought the dip. Well done, sir. What did you buy? Did you buy Ethereum? Did you buy Bitcoin? This is our free crypto resource, which B has put up in the comments. Check that out, which is on our website. And also, we have our webinar coming on our 2025 predictions, which is coming up on Thursday. So sign up for that when the sign up for that is also on our website. David asks, I wonder if MSTR is just really an expensive Bitcoin ETF. Well, I mean, there's a lot of debate, but I think MSTR is in this category like Palantir. I don't think you really want to react to the volatility in MicroStrategy. Maybe it is this, maybe it is that, but it's still trading at a premium to the Bitcoin that it's owned. And they have bought a ton more Bitcoin, which, let's say I'm right, and Bitcoin goes to 180, 200,000 in the space of the next 4 to 8 weeks. Is MicroStrategy higher? Yeah, I think so. So, yeah. Trump's crypto czar is speaking. If he doesn't announce a plan, do you think? Yeah, see, like, retail investors are addicted to news. I don't really care that much what he says. It's just not relevant to me. It would be a spike. It would be a dip. What does that do for me? I'm an owner for Bitcoin for a decade, for 5 years. Why do I care about like a momentary move up or down? It's just whatever he's going to say, unless he says, like, hey, he comes out and says, hey, we are going to buy $100 billion worth of Bitcoin, and we're going to do it over the space of 6 months or 1 year. Yeah, well, that is information. That is information. And I would definitely be like, well, that's bullish. That's super bullish, because that means they've given us a dollar amount. They've given us a time frame. That would matter. But if he comes out and says a bunch of stuff, there'll be people that will create a lot of content on social media, be like, it's this, it's that. But in the end, it won't really mean a lot. Actual buying would mean something, but they would be dumb to announce, like, oh, we're going to buy 100 billion over 6 months. They would be stupid. If you were going to buy 100 billion, would you announce it? I wouldn't announce it. I'd be buying secretly, right? And if anything, you would want to jawbone the market down, not jawbone the market up. Like, so that's my view of this. Mankind short squeeze. I mean, I theorized that, and the stock has essentially just gone down for this since I mentioned that. Nothing's changed. They've got their earnings coming up at the end of this month. United Therapeutics, who they benefit from, royalties on Tyvaso DPI, will announce their earnings a week before, so we'll know a week in advance what's going on. We need some buying pressure on the stock to see if there is going to be a squeeze. I've theorized that as a result of them converting their bond, that there is like a 10.5 million share, potential demand that has been unfulfilled from needing to cover. Everything still looks good. I mean, everything has gone right for them. I mean, Tyvaso DPI is producing what, $200-300 million a year. Afrezza, both their studies are successful. They'll have a new label for Afrezza, probably. I think they're going to apply for it this quarter. They'll probably get it third quarter. Then they've got, a next label expansion for pediatrics, which they'll apply for next year. And then that'll come the year after. They've got a phase 3 drug, which, which will probably get approved in 2027. They've paid down their debt. They're rudely profitable now. Having essentially toyed with bankruptcy, they're incredibly conservative. And most people just don't own it. So if let's say, like the broad thesis that I'm saying, which is we're in this market where the S&P 500 dominated by whatever, the top 20 companies, top 50 companies, and you got to own something else. You got to own smaller. People want to be exposed to something new, something that's growing, something that's innovative. Yeah, mankind would seem to fit the bill, but thus far we haven't seen like a big bid up in biotech in yet. But that is clearly a sector that is underowned um, by big investors. There's a lot of innovation there. There's a lot of growth there. Um, I think mankind would be a big stock in 2025. Uh, like I said, I think MicroStrategy is a stock you just own and you hold it and you listen to all the theories that people have online and it goes through here and out this way. I think there is a large number of investors who are not going to sell MicroStrategy. And that means that into any demand surge, it will get bid higher. As that happens, people who don't own it will want to be like, I got to own it. They will bid it even higher. The same price action you see on Palantir today, you'll see in MicroStrategy, I think, in the future. Miss Puppy Pup, who's a regular, says, before this recent group of S&P could be in, hi, Paul, before this recent group of S&P 500 companies, what companies used to be in? Things transition over time. It's good you're talking about this before. Well, I mean, if you look at, let's look at like largest S&P 500. Let's say at the top in 2007. Largest companies. Let's look at that. This is 2020. This is actually 2025. So let's go back to the last S&P 500 top, which was 2007. At the top in 2007, here you go. ExxonMobil, General Electric, Procter & Gamble, Berkshire Hathaway. You had Google, Chevron, Walmart, AT&T. I mean, some of these companies were there, but Apple is now what, a $3 trillion company. Google is a $3 trillion company. So, I mean, these were there. Some of them have gotten much bigger, but many of them are back. I mean, I mean, Pfizer is no longer there, but some of these are in the top 20, but the weights are nowhere near as concentrated as they are today. Nowhere near as concentrated as they are today. NVIDIA gave us that hint years ago with AI before the masses. Yeah, okay. I mean, I suppose so. But if that was true, then NVIDIA would have been bid up, well before then. The truth is that people were pretty skeptical about AI pretty much until Chat GPT was released in 2023. Yeah, that's definitely true. This is our predictions webinar. And we're going to, one of the things that we'll definitely try to do is scope out the next, if like in hindsight, you wanted to be in NVIDIA, Palantir, I suppose Microsoft, where should you be if my view of AI is right? It's a distributed technology that is going to be focused on niches, sectors, and industries. We'll definitely be talking about that. So sign up for our webinar, which is happening this Thursday. All right. I'm not sure what these comments actually mean. Fiber optics came in summer 2024. Yeah, I suppose. Quantum computing came when Google made that announcement about quantum computing, and then all these quantum computing stocks. I would not really call them companies. Most of them really don't have products. Um, just have gotten a huge bid, but that feels more straightforwardly like a hardcore mania to me. 3D systems. Yeah, Stratasys yesterday reported their earnings, and their earnings were marginally better than expected. Stock took off by 20%. They also announced a liquidity injection capital from a fund. Uh, that's our second indicator of the 3D printing market for stocks. For 3D, the market for 3D printing stocks improving. Protolabs showed the same thing in the last quarter. I think it's inevitable, and we've seen Zometry and Materialize, which is in gold here, doing well. So I think 3D printing is definitely on. I think it's going to become the trade associated with tariffs and reshoring, and these stocks are still pretty cheap. To you, I mean, most people just really don't follow the news that closely. Maybe to you it is. Yeah, I don't. Yeah, I would definitely not load up on Nvidia. I know there are people that think that. I do not think that. I don't know what. I would certainly. I would never suggest anybody load up on anything unless you're willing to lose a lot of money as well, because that's definitely a surefire recipe. Obviously, in success mode to make money, but in failure mode you lose a lot of money. I would definitely not load up on any of these things. I would take anything that this person is saying with a large chunk of salt. I would not do any of the things. What about Epsilera? Well, let's look at where Epsilera is. This is a biotech company. Now let's see. Yeah, we sold this out of the portfolio, and let's take a look at what they've been saying in their last. Let's look at their results from the last November, which is, well, I mean, this is what's called a development stage biotechnology company. They used to have a royalty company model, which they've now just straight up are a biotech company. I would think that we could see a market shift where it wants. Oh, I didn't show what I was looking at. You can see here. This is the last results. I mean, they generate $6.5 million. We would need a shift in. They've got a lot of money. They have $670 million, so they got a lot of money. But they are now essentially a biotech development company, and let's see, how much do they spend? Yeah, so they're losing about 100 million, 130 million a year. So they got about 4 years worth of funding. We would need for this to go into a bull market, for Epsilera stock to go into a bull market, we would need something that the stock market has not been valuing on an upward trajectory for almost a decade, which is clinical stage companies getting bid up and continuing to get bid up because of a series of clinical stage developments. In other words, hey, you had a successful phase 1, we bid you up. Oh, you're going to have a successful phase 2, we bid you up. We've seen very little amount of that in 2014, where there was a bull market in biotech. I mean, you announced FDA approval, the stock would be up 70%. You announced phase 1 result, 200%. We haven't seen that. Maybe we'll see a shift where people are willing to do that. And if that's the case, we will look at more clinical stage companies. Yeah, I'm not a Nvidia investor, and I'm not a buyer of Nvidia. People are crazy for Nvidia as if it's the only stock. Generally speaking, you want to be early on those things. I think like it is that many people are focused on. I'm really have no interest in it, and I'm not a buyer of Nvidia at these prices. I think generally the chip market, which it will trade with increasingly with the DeepSeek information, is in decline. There are a lot of companies that in the chip sector that are being bid down to 52-week lows. That's bad for Nvidia. That's bad for those sectors. For me, Nvidia is not a buy. 52-week highs. I mean, essentially, it's pretty much trading at. Yeah, I mean, I can see this. Matterport is being acquired. I forget the company that's acquiring it. I think it fell well below the acquisition price during the Biden administration. Now that Trump is in power, maybe it's going back to what the acquisition price is. I have not looked at it, so I'm just kind of talking off the top of my head. But this is a company that, essentially that bump to $5 was it being acquired. And maybe there's like some small premium on top of that, but they are being acquired. So that's going to cap out the price. I don't know. I can't remember. We sold out when this was announced back then. And I imagine that with the Trump administration being more friendly towards business acquisitions, that this acquisition will go through, and that's why. There's nothing fancy. I mean, we were up 300%. I didn't want to lose the gains, and it was trading at 70 times sales. There's really nothing more to it. There was always a chance it could go higher. I'm not infallible when we sell, and it obviously has gone higher. I think that what it does show is that people are their valuation parameters in this market are very different than old school valuations. 70 times sales is a crazy high number by old benchmarks, but clearly we have investors who don't think that, and they're willing to bid it up even higher because of the idea, perception that Palantir is such a unique company and investment that you'll pay rising levels for it. So it really is it's never anything complicated. As a stock picker, if Palantir had disappointed with their earnings, the stock would be down 30-40% today. So if I don't sell and I expose the subscribers to that, then they be like, Paul, why didn't we sell? We had 300% gains and you sat there doing nothing. So, as I told the team, I'm like, there's many ways to be unhappy even while making money. You sold too early, you sold too late, you bought too early, you bought too late. You could have made more money in something else. You could have made faster money. Subscribers made money. I'm not going to be right about every single decision. At some point in time, we'll go back into Palantir, but that's essentially the explanation. Are Path and Upstart both on our list? Path is in silver tier, and Upstart, I believe, is in gold tier. Nike, not in my opinion. I would not be a buyer of Nike. That's on my view. This is a stock that I think got caught up in the craze for dividends, the dividend mania stock trade that was part of 2023 and 2024. Nike obviously has the brand, but they make a commodity. I don't know what they trade at. I think there are a lot of people who bought it for their dividends because they were dividend champions. Those folks have to get liquidated out. And then if I can get 3-4% in a savings account, why do I need these dividend stocks? So no. MAGA market. I don't know if there's a MAGA market. I think what there is I think the market is essentially for, if I have to break it down, it's for very scarce things like Bitcoin. You can see gold and others being bid up, And here and there, we can even see companies that own very unique or scarce assets, particular land being bid up. And then for new is like a word for innovation. Those are the two places where the market is willing to buy and bid higher and pay very high prices. Listen, I have a lot of conviction. You don't have to buy. Yeah, you're not, nobody put a gun to your head to buy. I noticed your comments and I noticed the saltiness of it. You're not required to buy. Yeah, I mean, when you pays your monies, you takes your chances. Some of the trades are going to work out. There are going to be periods when trades work out, and these positions are getting wrecked. Don't buy. Bet less. I'm not infallible. And if I see an opportunity, I'm going to go at it because, from my perspective, if I don't go at it and the stocks go up and be like, what can I say? I shoulda, I coulda, I woulda. So, hey, if you don't like the trades, don't put them on. They're not guaranteed to make money. There is risk in the markets. Yes, I have a lot of conviction, and that shows. If I didn't have the conviction, I wouldn't put it on. But it is up to you to decide what you want to do. You're not guaranteed a profit. You're not guaranteed gains because you have a subscription. Hot tea with ginger and honey. I have been taking a teaspoon of honey every day, which yeah, tea I don't really love. I'm looking to subscribe, not sure which tier to go with. In learning options, would I do only 1,000? I would start truthfully with silver tier, which is $9.99, and just see, which is like, do you like what I'm saying? Are you really willing to invest anything? um, do you find the risk and volatility that I expose people to through my picks acceptable to you? And I'd start with stocks. I know you want to jumpstart with $1,000 in options. Truth is that 3 bad option trades and your money would go away. So I would tell you that starting with options is a terrible idea. I mean, I might lose you as a customer, but that's my view. I think any person should really start with silver tier, watch some updates, buy, just trial the things out. I've told people buy one share of like 20 or 30 stocks, and then just see, what does it feel like? Go through the volatility there, and see, how it feels, and then build from there. We often do options on many of the same stocks that we are in the gold and silver tier, when those stocks have a lot of upward momentum. But we're not in a market where we've seen a lot of stocks show consistent upward momentum. So the options tier, the platinum tier, has seen inconsistent results. We've had big waves where we've had a lot of gains, and then we've had where options, they've been expiring worthless. So we have gone through these periods fairly consistently to 2024. And during, of course, after we have a huge wave of profits, everybody's super enthusiastic and, wants to buy every option that's there. So I would tell you that it's a high risk proposition if you're starting with $1,000, and I would start with the silver tier. Yeah, that I think is one of the AI trades that I mentioned in the gold tier update. Very few people know about that company, let alone own that company. It is a IPO. If we get a wave into biotech and genetics, because people under-own it and they go, oh, I want biotech, genetics, AI, then that will be the company that they own. So fingers crossed. Yeah, I mean, I think we're near the end of the sideways movement for Bitcoin, and the next move takes altcoins with it. That's my view. Will RFK affect our drug stocks? Yeah, this again, this is a viewpoint that so many retail investors have, which is that news drives long like a change in market behavior. I have not found that to be true. News creates volatility. Info changes in like an actual shift in driven by information. Like I said, like something real, tangible, that drives the long-term demand and supply balance so people come to buy. I don't think his confirmation changes anything. I think what will change things is that people will be looking to sell out of big tech to some extent, or even take some profits from there. And as they go to redeploy, they'll go and see that the biotech genetic sector is very, very cheap with a lot of innovation and growth in front of it. Um, I track both these companies. They're obviously very exciting technology, but having been burned previously in buying into hype cycle and mania cycle stocks like cannabis, I just stay away. And I'm like, I would prefer to be in stocks where I can I can actually look at what investors are bidding up. Like for example, with Palantir, I mean, they announced their earnings and their sales, and they're up 32%. Now, while the valuation is very high, I can understand what they're bidding up. With Joby and Archer Aviation, I mean, there are these licensing milestones that they're hitting, and sometimes they like, oh, we have this deal with United. They don't have a business. They still don't have a business. So they got to go through all the licensing. Then they've got to put up commercial manufacturing to make these things in quantity. Somebody has to use it. These are all like hurdles that, I mean, they might do well. I mean, I clearly there is a group of investors that are very keen on owning these stocks, that are keen on this technology. I'm keen on the technology. I just have been burnt so many times by buying into hype cycles where there's not a growing business backing the value of the stock. And in that scenario, when the sort of like the music ends, there's no chairs. And then if you're in, like you don't know where to get out because you don't know what milestone to sell at. So I've stayed away from them, even though I'm monitoring their progress on a technology basis. What about the makeup companies and PayPal? I am like the makeup companies, but they are too, I don't know. I don't know what the right word is. They're not overpriced. They're too popular is the right word. In other words, they got bid up post-COVID into the reopening trade. That was one of the companies that got bid up, Elf and Estee Lauder and others. And they got too popular. And now you can see there's the overhang of sellers that come in, even as their numbers are pretty okay. There's sellers constantly coming in and pushing the prices lower. So at some point in time, I think part of our millennial boom trade, we'll buy it back into. Well, I mean, we'll buy something like an Ulta or an Estee Lauder, and put that into the portfolio. But they need to become more unpopular, and that means that the sellers, who bought at much higher prices, get liquidated out. Then there's low expectations. The demand supply balance is in favor of buyers, and that will drive prices higher. Yeah, this is one of these other companies that there is a lot of enthusiasm by people to buy. I mean, even prior to, I'm just going to put this up here. This is the Sophie chart. I just think, like, given a choice between Coinbase or even PayPal, even though PayPal is doing, recent performance is poorer, or Block, which has the ticker symbol now of XYZ. As a business, I prefer those companies over Sophie. But I mean, clearly there is solid enthusiasm for these stocks, and people have been willing to bid it higher. I just prefer other companies to it. Yeah, I'm not interested in AMD, just like I'm not interested in Nvidia or any of the chip companies. I just think those have hit their cyclical peaks. We made a lot of money buying it very early, and I'm out. And I just think that there are better risk reward propositions than chip companies, whether it be Nvidia, AMD, Intel, Rambus, SG Microelectronics. I don't want to be in any of them. I'm out, I'm gone, and I want to be out. Yeah, it's going to happen, as I like to say. I was telling people, there are many ways to be unhappy and sad about making money. And this is one of the ways. In other words, you sell and it goes higher, especially immediately after. It is going to happen. Not I won't always get the timing of selling right. If you read books about investing, selling out is difficult. Often the things that you want to sell, which have big gains, often are the ones that in hindsight you wish you sold. But as I was telling the team, how can you sell for big gains other than selling the ones with big gains? So when you're looking to sell and cash in big gains, you're potentially removing a stock that could run higher. And I have to balance this out, which is that if I hadn't sold and they disappointed their earnings, you'd be like, why didn't we sell PLTR earlier? So I obviously take the blame for selling early, just like I would take the blame for selling late. And it just goes with the territory. I'm never going to get them all right. I do my best. Yeah, if you know anything about semiconductors, PEs are irrelevant. They're cyclical companies. You want to buy them when they trade for like 150, 170 PE. Yeah, this is, but Palantir is not a cyclical company. This is a growth company. And this is one of the market shifts that's going on, which is that people are willing to pay 75 times sales and whatever PE. I mean, as a growth investor, I focus on sales. So they're willing to pay that. What is the high number on it? Well, I mean, they're growing by 25 to 35%. Let's say they grow by 40%. If they continue to grow at 35, 40%, and it's going to be 70 times sales, Palantir will keep going up. So, we will look to go back into Palantir because I think that the people who hold Palantir don't want to sell. And the people who are outside, which now includes us looking in, want to buy. And the market knows that. And if that's right, then the valuation is going to go higher along with the price. Thoughts on Fannie Mae and Freddie Mac? Let's look at these. This is a 5-year weekly chart. 780 down to what the low was 490, so about $5. Nothing's changed. Everything's still there. We haven't really heard much from the Treasury Secretary or from President Trump on Fannie Mae. Everything that he's ever said on it still stands. These companies are going to be set free. What are the conditions under which they set free? We don't know in full. As those things get rumored or else position papers leak on what's going to happen, we'll see the next set of movements in Fannie Mae and Freddie Mac, but there's nothing really going on as far as I know. Yeah, I mean, I would not be buying any of the things that this person mentioned. I just want to make that clear. Yeah, we sold Matterport when it was the original acquisition was announced, which is our general sort of like modus operandi, which is whenever whenever something is acquired, we immediately sell on the day that it is. And that's from a long experience, which is that the highest prices um, and the most liquidity is on the day of acquisition. Um, you're welcome, sir. I appreciate it, but I do want to say, like, I can make a lot of mistakes. Yeah, I mean, I obviously took us through a horrific bear market, which in hindsight, I wish I didn't. I wish we sold everything at the top in 2021, and I wish I bought everything at the bottom in 2022 and 2023. But I didn't necessarily have that level of foresight. My general view was that a lot of these companies, including Palantir, including Zoom, Teladoc, which are all still in smash position, others, these companies were very young, had very low market capitalizations with enormously bright futures in front of them. And that still is true. I mean, that still is true. Now, Palantir today is a $225 billion company with something like, I think, between $5 and $6 billion worth of revenue. No one in 2021 or 2022 or 2023 would ever imagine that we would go from that market environment to this one. So my point in bringing that up is that the world changes pretty quickly, and we are in the midst of the greatest level of technological, social, market, financial change. And you got to be open to doing things differently in different ways, taking some risks, eating some losses, exposing yourself to some bigger volatility than what you want for very large rewards. Because as is clear from so many of the stocks, man, you just don't know. You just don't know. I mean, who could ever imagine that these quantum computing companies, stocks, would rip higher? I mean, they've got no business at all. None. I mean, they're complete driven off a hype cycle, but people are buying them. And then people made tons of money on them. Do I still like the equal weighted S&P 500? I think after 7 years of the cap weighted S&P 500 outperforming, that it's, my thesis is that the smaller companies will do far better under that scenario. Yes, I think equal weight is better. Yeah, but it was announced for stock and cash, and so the 275 really I don't think is correct, because it was a stock deal as well. Yeah, I know I'm a very tough judge of myself. Once we sold Palantir, I was like, I saw it make a new high, and I was like, ugh. Generally new highs are indicative of more new highs. And yeah, I mean, either way, I'm not, I have no shame in the sense that no one knows everything, right? I mean, and you have to be willing to accept that you're wrong and then adjust your behavior to make money. You can't have pride, you can't have arrogance, you can't have some know-it-all attitude. And 2021, 2022, 2023, I ate a lot of humble pie through all of it. And I think we've benefited from some of it, but I think there's more gains to come. And I'm learning more because this market is changing some more. It is not the market that we had from 2009 till 2021. This is a new market. It's being driven by younger investors. It's being driven by retail investors. It's driven by much more speculative investors. And we got to adjust to that. So, like I just look at the questions I'm being asked about: eVTOL stocks, quantum computing stocks, AI stocks. So that tells you where people's minds are, what they want to invest in. So the market's a little bit like that, and we have to look at the world and be like, okay, like maybe we do some mania stocks. And we're doing some like, AI tokens in crypto, but it is different because you don't know what to measure against, and you're have to really go off, what you think other people are going to do, which is trickier because that's purely mass psychology. Yeah, they do have some small business, but relative to the market cap of this company, it is almost nothing. And nobody that is bidding up these stocks is really going off their financial results. But I will say this, the quantum computing folks, if you bought at the bottom, you made a ton of money. So, hey, good for you. I mean, yeah, I mean, one of the things that I think, like, I'm glad to be at HEG Digital, which is my company owned by me, is that I get to tell you what the risks are. At Banyan Hill, if I said something like that, they would edit it out of the updates. They never wanted me to talk about things like that. They controlled what could ultimately go out and be said about anything. And they certainly would never allow me to read a disclosure like what I read in front of this live stream, or even what I say in front of every update. I don't really want people to lose money. It distressed me, and it distresses and continues to distress me when people lose money. But the nature of investing is that the gains are always speculative. In other words, the prices are always moving around. So, like we sold Palantir, we made, I don't know, a few $100. I don't consider that a failure because it went up and we still made money. And, all gains are speculative. So, I mean, but having said that, in the end, you got to invest for yourself, for your psychology, for your financial profile and risk. I think I answered this in the sense that I prefer PayPal, XYZ, which is Block, Coinbase, even Marqeta, Blend Labs over Sophie, just because the utility of a Sophie versus those, in my judgment, is less. Wow. Wow. Well, I'm sorry that has been your experience, but you bought somewhere near the top, obviously. I think I thought the top was in March of 2021. So, I mean, I don't know which ones that you did, but certainly 25% is better. And I commend you for holding still. And I will say, if you can, rules of the game, won't necessarily make you the most amount of money, but investing is really about having as many shots on goal. I mean, obviously, if you're trying to get rich instantly, it's a totally different game. Then obviously you'd pick one stock, but you get blown up as well, because oftentimes we pick the very low price stock that we can buy hundreds of thousands of shares in, and those are the riskiest ones. But I'm sorry that's what your experience, and I'm glad to see you're doing much better. I think we saw the press spokesman say that they were drones that were approved by the FAA, and they were just drones. Marathon Digital is a miner, and let's just see, where are we with Marathon? Well, we're closing in on 2:00. No worries. Marathon Digital. This is a 5-year chart. Make sure I'm looking at it. So the basic math on miners like Marathon is that the part of their business that gets bid up is the spread of cost of mining Bitcoin versus the realized price. So this is the approximate cost off here to the right, which is $82,000, and Bitcoin is at 99,000. What we have seen in the past cycles is that as the margins show consistent expansion, investors come and they bid up the miners in anticipation of them beating estimates, blowing out estimates, and that continues for about a year. At the current price, they're making about about 18%. I believe into this next quarter, we'll start to see a bid up. Both, even off 18%, means that they'll likely show better numbers than what most people are expecting, and certainly what is priced into Marathon stock. So we'll start to get our first bid up with this quarter. Where is Marathon? Marathon here. And we're going to start to see these start to move higher. Mankind Corp. This is a 5-year chart of Mankind Corp. Same thing here. They will report their numbers come month end. Their numbers on Tyvaso DPI will look good. The numbers on Afresa, we don't know. They had some good data on clinical trials from Afresa. There is a rolling insulin shortage in some parts of the world and or our country because of the $35 price that was implemented. That might drive some market share towards Afresa. There's the 10.5 million shares of convertible hedge that has to be covered. Those are the scenarios that could drive Mankind up. And what we've seen is that between the fact that there really isn't an active market for biotechnology stocks because they haven't done well, and we will extrapolate the past. We need money to come into biotechnology, money to come into genetics. And with that, now people will start to assign rising multiples to their existing revenue stream. And we just haven't seen that. But biotechnology, genetics is a sector that is, most people are simply underweight in a significant way because people have been very focused on tech and just increasingly just willing to bid up those kinds of stocks. I hope that answers your question. Unity Software is still, this is a 5-year chart of Unity Software. I would put this in the same category of sort of like Roblox and others. They need to anniversary through their low growth numbers and start to beat estimates. And with that, people will come to bid them higher. They are still a quite unique company in terms of what they do. So they could be a future, what I'll call unicorn stock. In other words, they're seen as doing something unique that nobody else does. And into growth mode, then they would get a rising multiple off their sales. As it stands here, so their price to sales ratio for Unity Software is 4.2. Just remember, Palantir is 70, and you can see that the collapse in price comes from this multiple collapsing. At the top, it was 55 times sales. Now it's 4. But let's look at expectations. So I like to look, this is my shortcut. These are the estimates for the current fiscal year and next fiscal year. So 20%. So if they're able to beat that, then that gets investors interested and they'll come back into the stock. At least that's my view. Thank you. And I appreciate it. I just, what else could I be? I don't want you to lose money and I don't want to mislead you. At Banyan Hill, I couldn't always communicate what I wanted to say in the way I wanted to say it because Banyan Hill was a marketing organization rather than a company that distributed information. So when I find that I'm making, like with Palantir, I've just been like, what are the lessons to be learned? Every mistake is an opportunity to learn. And that's one of the great things about this business, which is that nobody gets everything right. And if you are open and willing, there's always something to learn, which is like makes things great. Yeah, hopefully that's the one that I covered, which is that the price to sales ratio has collapsed. Growth needs to come back. with that investor interest will come back, and then it'll start to get bid up. My ideal data center plays. I don't know if I have them offhand. I would get interested if I saw these start to show up on the 52-week high list. I've told you, like, while that may seem late to all of you and you want to get in much earlier, this is the 52-week high list for today. And I don't really see any server companies that are there. And there's no real sign that people see that this is what they want to own in a big way. So I know at various times we owned. Keep forgetting to do this, but here's the 52-week high list for today, and you can see what is being bid up. The big tech companies, once again, people are buying and bidding up and willing to pay. DoorDash has been on fire. Google, people continue to bid up. Netflix. So, I mean, people are still willing to buy these companies. Here is Palantir. Roblox being bid up. These companies are being bid up, and what they have, I've been like looking at these resale companies, ThreadUp, Revolve, MyTeresa, and others are being bid up. We have to go back and maybe buy into those. This is a stock we own, a Xpeng, which is a Chinese EV maker that is just blew out their results for this quarter. But I don't really have a data center stock for you. Yeah, I'm glad I made my own company as well. I don't really make anywhere near as much money as I used to at Banyan Hill, but it's a lot easier. And I like my work better. We're just about one thing, which is that we try to provide you the best information that we can, whether it be stock picks, whether it be a view of the world. I don't worry about like, okay, like the marketing implications of telling you that I might be wrong about that. Like, yeah, Palantir, like, yeah, in hindsight, they obviously shouldn't have sold. They would never let me say something like that. They would be like, that looks bad. That, would reduce your authority level. I'm like, whatever, it is. Yeah. Let's look at Hive. I mean, the analysis for Hive is the same as for Marathon. And if you see here, they approximately look like the same chart as well, which is that the spread against their mining costs need to continue to go higher. And with that, people will come to bid it up. And I think that'll happen with the current quarter. Alex says hi. Hey, Alex. And Tesla. Yeah. Tesla 5-year chart. Bah. Well, made a new high, right? All the way here, which is what? In December. And then is essentially drawn some sellers. Not a shock that at about $500 it draws sellers. Well, we got some big things going. We've got Robotaxi being launched in Austin. So the revenue stream from that will start to get capitalized into Tesla. We've got Optimus Robot. We've got with slightly lower interest rates, probably on the cards for the second half of this year, early next year. That will revive the car business and where they don't have to discount to move inventory. So that will move profitability up. So a lot of different plays. Remember, Tesla is valued like a car company, which is cyclical. Robo taxis and FSD will make it a little less cyclical. So I'm bullish. I mean, I think I think $1,000 should be easily possible in 2025. Not a guarantee, but that's my view. Does Dan or Dean post on YouTube under any other particular name? Would like to watch more frequently if possible. I don't think that they post anywhere else other than on my channel. And if you're subscribed to my channel, then you get to see Dan and Dean. I think they alternate in terms of creating content, and you can see all their stuff on our channel. Yeah. Am I pleased with the trajectory of ATG? Yeah, I mean we are robustly cash flow positive. I'm nowhere near making what I used to make at Banyan Hill, but we have a wonderful team that cares about what we do. We are diligent, we are honest, and we all go to sleep really well at night. We have about, I think, 2,400 subscribers, which is somewhere near the peak. It's nowhere near the 165,000 subscribers I had at Profits Unlimited. But, I mean, we'd love more subscribers, but I don't think, we're going to chase that. We're very focused on just like, hey, how can we serve our community the best as we can? And if our community wants to support us, then I think we're going to do fine. So I mean, the answer is yes. I mean, we're very happy. I'm happy that we started it. I'm happy with the work that we do, and I'm also stoked that at least some of what we have laid out has come true, which is that it was a real chance taken by so many people to support us. I mean, we crowdsourced nearly $300,000 as a start. So that's an enormous act of faith, and we are very honored by that. And so, I mean, it's been great. I have no complaints at all. Oh yeah, I forgot that Dean does have this channel. I didn't know if he was still posting. Thank you, B, for putting that up. I think Dan may not have another channel, but Dean does have its own channel. And subscribe to Dean and check out his content, please. All right, we have gone on. We keep extending these live streams longer and longer. SMCI is in the same trajectory as all chips. I mean, they got bid up in the chip AI trade and alongside with NVIDIA. And I've said goodbye to that because my view of chips is this is a very cyclical industry. You want to buy them when they look like they're going bankrupt, which is when we bought SG Microelectronics, which is when we bought AMD, which is also kind of when we bought Rambus. Everybody hated them. Everybody was totally happy to tell me, Paul, do you see how bad these are? And I was like, yeah, that's a cyclical business. They look terrible at the bottom. They look great at the top. And you don't really want to mess with them, Yeah. So I for me, these are all in a void. You're welcome, sir. And I appreciate folks tuning in. We've kept the vast majority of our audience through this. ATGdigital.media is where you can go for subscriptions. Also, give us a thumbs up. Helps us with the Google algorithm. And subscribe to the channel as well, which also helps us with the algorithm. Thank you all for attending the live stream. Nearly 2 hours has gone like that. Send in your questions if you're a subscriber for anything that we've done, Palantir, any other stocks or crypto. We're always happy to answer it in the best way that we can. And come back next week, folks. Thank you all. This is Paul saying thank you and goodbye.